So this weekend I went out with some buyers and we had to talk to their lending side. And while that conversation happened, we're going through the numbers. Towards the end, we just started talking about the benefits of being a homeowner. And like got me realizing really quick, this is something that we need to talk about. And some of these benefits, obviously, some of these might be some general information, right? But for those that are listening for the first time or barely getting to the first steps, they haven't heard of this, or there's also some things that, maybe you just didn't know about or really grasped it also. So the first one I want to talk about is stability. So stability, what that means when you become a homeowner is compare yourself to a homeowner and a renter, and let's see the two differences, right? So when you buy a home, you get a fixed rate mortgage, and if you remember what that means from the last time that I mentioned it, is when you buy a home, instead of you paying your rent towards the apartment owner or whatever, you're paying that towards your loan that you got for 30 years. So what you're paying in there is your PITI, principal, interest, taxes, insurance, and two out of those things for the most part always are they're just locked in, right? And what that means is your principal and interest from that loan stays locked in for 30 years. Taxes and insurance could go up just depending on how it goes up and down from the companies and the tax rates. But the largest part stays the same, and that's not the way that rent works. So in San Diego County, let's just say rent's based off on market demand, not your income. So every year you're exposed to getting a slight increase, somewhere from like 1%, give or take, right? And with home ownership, that's not what you get. You get something that's called predictability. So every single month, unless it goes up a couple, like, $10, $20 extra because of the insurance and they raised it, it stays the same. So with that, that also helps you with stress. How? Because you can predict what your payment is going to be for the next month and the month after that, and then the year after that, and then the years and years after that. But with rent, that's different. With rent, you have to consider, hey, this is how we got into this apartment, and this is the price that we got into. Maybe next year they're gonna raise it. Maybe the next year they're gonna raise it. Next year they're gonna raise it, and at some point you're gonna be telling yourself, "This is too much. This is way too high. We need to look for somewhere else where they have a better monthly rate." And again, with that stability, homeowners never have to experience that. Only renters do. And now let's go to number two. So number two, every month you make a mortgage payment, you're paying a portion of the the principal on your balance. So that means that yes, it is an expense, but at the same time, it's not, because that money is going from your checkings account straight to your equity of your home. And for most people that say that they struggle with saving, being a homeowner forces you to save, because whenever you get your money from your checkings straight to your house loan, it's an invisible savings account because you keep adding that money month after month, year after year, and your balance keeps going lower and lower and lower, but the equity keeps going up and up and up, and you start building that gap. And with that, say 5 years into the ownership, right? You might have thousands of dollars saved in, and it feels like you didn't save anything. But once you start taking a look back and looking at where you started to where you're at, and also looking at the equity in that property, you start realizing you were forced to save, and that's not like a renter. When you do that and compare yourself to a renter, if you think it's gonna hurt you, you think it sucks that you just see that money and it disappears. It's not. A renter's is, if you're a renter and you start paying your month to month payment, right, of you're staying in the apartment, it just vanishes. Yes, you had somewhere to stay, but then that doesn't also give you any benefits at the end. So take a step back, and yes, home ownership, you're paying, but that's not going to just anywhere. It's going towards something that belongs to you. And on top of that, let's look at the equity. So in addition, of course, paying your principal down, it's a loan, and that means that it's getting smaller and smaller. But historically, properties appreciate over time. And that means that because while you're paying that down, in the meantime, the market can keep going up and up and up, and it has been, right? You've seen all those charts, you've seen all those calendars. I've shown you in other videos where even though, let's say it was like 10 years ago, it was right here. Yes, it had its ups. Yes, it had its downs. It kept going up and going down. If you looked at a short term, that's what it looks like. But if you zoom out within 5, 10, 15 years, you can see that it started from right here and it's right here with all those ups and downs in between. But generally and historically, it goes up. And if someone has been owning for 5 years, they've had their principal reduce plus appreciation on their property. And that combined is what is leverage. And compare yourself to a renter that has done the same thing for the last 5 years. Every single month that they've been paying for it, they have been building nothing. And it's not to, look down on a renter, but situations happen where they have to be renting versus owning a home. But just compare that to owning a home and the benefits of that. And here's another thing. I'm not a tax expert, but this is just general information, basic info that every homeowner does. As soon as you go file your taxes, they're going to tell you right away, do you own a home? And they're going to plug that in for you. But for many homeowners, the interest within the PITI, principal interest, taxes, insurance, mortgage interest is tax deductible, which means that it does not mean that your house is free. It means a portion of the interest that you paid throughout the whole year get reduced from your taxable income. And for some family, that means getting a couple $1,000s back, depending on their situation. And renters don't have access to this. It's an important note. Again, I'm not a tax expert, but that's awesome for you when you're filing your taxes. That means you might get money back. And if you're a veteran, this is a part that most people don't talk about. Let's go back to the taxes. So in California, if you're a veteran with 100% disability, you could qualify for a tax exemption depending on whatever the situation is, but you can qualify for this, which means that they can get a portion of your property taxes reduced. And what then that also means is that your mortgage payment will be deducted also. The decrease will decrease because taxes are built into your PITI. So in the long term, that's a pretty significant financial advantage because say if it dropped it at $100, $200, that means that $100 and $200 that you were gonna pay for the taxes is gonna stay in your pocket. And here's another thing. Let's talk about flexibility. So when you're building equity, that means that you're a homeowner. That means that you're building options. And what I mean by that is, let's go to the renter again, right? The renter goes and finds this apartment, finds this place where they can, stay, they lease, whatever. What they're doing is they're signing a lease for whatever time amount, and they keep paying, and that's it. That's it. When they wanna do something differently, they can't ask the landlord unless they have a close relationship or whatever. But they can't say like, hey, can you reduce my monthly rent, or hey, can I, be can I take this payment that I've been doing to somewhere else? You just can't do that, right? But when you have a house, say you have the option to refinance, which means if you got locked in at an 8% interest rate, maybe a couple years ago, you can refinance now when it's in around the six range. That's a huge drop, and that means that you're gonna get a better deal on your everything. And say for a HELOC, also you can't leverage renting a spot with you buying a home. With that, what that means for those who don't know, a HELOC is a line of credit, a home equity line of credit, which means if you have 100,000 K of equity, you can go to the bank and ask for a HELOC, which in return they will give you a line of credit, which is pretty much like a credit card for emergency uses. So you have a 100K limit on that one credit card, and it's leverage against your house, which you can't do that with an apartment, or you can't do that when you're renting. And say at the very end, whenever you're renting and you want to move out, that's it. You're like, hey, I'm gonna move out of here and I'm gonna look for somewhere else. That's it. And you leave with nothing, all just that money paid towards your rent and whoever owns that building. And then say if you're a homeowner, you want to do the same thing. Well, what happens is within depending on the time frame, depending on how everything lines up, you're gonna walk away with a check. So you can sell, get that money, and say if you have enough money, maybe you can take a couple months off. I don't recommend it, but just say you have that amount of money, you can take some amount of money, give yourself a cushion, and get everything lined up. Or you can just deploy that into a new property and upgrade or downgrade or whatever from being a 3 bedroom to 1 bedroom, and you still have some money left or whatever. But the point is that you leave with money in your pocket versus zero money when you're renting. And now here's the thing. to think about. When you own a home, it makes you think in a long-term mindset, which means that you start evaluating things differently. You start thinking about the next move. You start thinking about what you can do now, how you can leverage this, how your property is going up in value, certain things that you would have purchased while you're a renter, you would not do as a homeowner. It's starting to force you to have that discipline, which in the end, it sounds harsh, but I think it's a great move because being a homeowner forces you to save, which that savings doesn't disappear. It goes into something that's yours. It forces you to think about the next expense that you're trying to make, which is good. It's giving that discipline to say, hey, I'm not just gonna drop a couple $1,000s on this thing that is not gonna, give me any value. And now you're thinking about, let me just put this aside in case a rainy, emergency funds or a rainy day. And within there, it just makes you start seeing things differently versus when you have that renter mentality to the homeowner mentality. That discipline starts compounding year after year, and say every time that you thought you were going to spend on this year, you started putting it away, you started putting it away, you never needed it, and guess what? You just start growing your own savings account on top of paying your principal and on top of everything compounding with the equity. So when you start talking about the benefits of owning a home, yes, I do mention the flexibility of you having your own space. You can do what you want. You can paint the walls. You can decorate whatever, right? But what I like to talk about and is the stability of the mortgage payment and how it stays year after year. You don't have that uncertainty of it's going to go up this year, it's going to go up next year, and now it's too much. I'm going to be forced to move to a different place where I can, it can fit my budget. And then it's also forcing you now to save in one way or another. Either you're just gonna start saving by putting it straight into your property and the loan amount where it's bringing down the balance and the equity is growing, or it's also forcing you to rethink that purchase where you thought maybe I could have dropped a couple hundred, a couple $1,000s, and now you're thinking, no, you know what? Let me just hold this just in case. And then, of course, the tax advantages. These are all the great things that come with owning a home that I always want to talk about. And specifically, if you're a veteran and you get the 100% disability, you get even more benefits than the general population. So I think with all the benefits, home ownership, yes, is a pride of owning a home, but it's also there to help you financially long term in a lot of more ways than you think. And once you understand all these pieces and you start looking at it within a couple of years for comparing yourself to renting and buying, you start seeing and zooming out, looking at the next couple years, next 5 years, next 10 years, 15 years, and you're going to start seeing that maybe it's better owning, even though if it's scarier than it is renting.